Hello traders, today is the 3rd of June. My name is Neville Hornsey. I'm a market analyst for YouTrading, and today I'm looking at the markets ahead of the US NFP. Okay, starting with the Forex heat map, we can see that it's pretty mixed across the board. The Australian dollar is weak, which is a reversal on the week's flow so far. Seeing a little bit of a pullback there, maybe some profit taking. Canadian dollar is doing really well. New Zealand dollar is following the Aussie lower. Swiss franc and yen are also off today, and we're seeing bids in the US dollar and in the euro. So pound, disregard that for the time being because the UK traders are basically on bank holiday. And yeah, we'll just go straight into the economic calendar. We can see that there hasn't been a lot of tier one data in the London session so far. We're all waiting for the US non-farm employment change, their average hourly earnings month over month, and the US unemployment rate. There will be some FOMC speakers, and we also have the ISM services PMI to come out sort of like an hour after the futures open. So essentially, everyone's waiting for the NFP. If we go to the active trader platform, we've got the S&P 500 here. We can see that we're correcting the high to the low that we saw from the 29th of March down to the 20th of May. 20th of May was significant because it sort of touched down towards the 3,800. Obviously, we'd dipped below the 4,000. This was an options expiry day, so we had a lot of volume come in, and yeah, basically the market went higher after that. We found support from this previous swing high from the 18th of May. We can see that 1st of June, in the middle of this week, we found support, and then yesterday we had a bullish reversal. So it's an outside candle, looking to see if we can get back above yesterday's high, back above the 30th of May, and then see if we can come up, attack this 4,311 sort of level. We've got lots of candles highs here, so there'll be a lot of liquidity up there. We do then run into the daily 200 EMA, but for me, I think we're going to go higher. The reason for that is if I just go to an Excel spreadsheet that I sort of keep up to date. So on this spreadsheet, I track the sort of Federal Reserve, the general account, whether or not they're sort of having a drain or if it's having flows go in. We've also got the US fiscal flow. So this is the amount of money being spent into the economy. We can see that the fiscal year 21 to 2022, so that's from October 2021 to present day, and we're seeing that it is relatively high compared to the years gone by. So fiscal year 16 to 17 is this dashed red line, up to fiscal year 18, 19, which is the blue dashed line. We can see that current fiscal year is above those. Obviously the 19, 20, 2021 fiscal years were greatly affected by the pandemic, so we saw lots of spending going into the economy then. I'm just going to look to the right. I've got something going on here. We've got the surplus and deficit. Now, the US economy generally sort of has a deficit. Everyone's always talking about the deficit and how President Biden wants to reduce that deficit. We can see at the start of the year, we were actually in surplus. And then if we come here, sort of 14th of April, all the way through till the 14th of May, essentially, so a whole month there, we were also in surplus. And now we've just got back into deficit into the end of May, beginning of June. If we go to the NFP, we've got non-farm payrolls here. The average, as you can see down here, is 472. The previous fiscal year was high, 484,000 per month. The Fed Chair Powell basically said, a few months ago that he'd like to see around 550 to 600,000 jobs created each month. However, recently they've been on about actually sort of creating demand destruction. So they want to sort of see people spending less. And if people spend less, then their corporate profits are going to be lower, which means corporations are going to lay off people. So we might have to adjust the Fed Chair Powell's sort of envision of 500,000 a lot lower. And if we go to the ADP, NFP, we can see here that ADP, NFP essentially track each other. The ADP yesterday came in a lot lower than expected. It came in at 128,000. So we could expect the non-farm payroll at least to come that way, or it could diverge from the ADP once more, and essentially maybe ADP will be revised higher in the coming months. Now, the reason I showed that the US economy has basically gone back into deficit is because we can see here at the beginning of 2022, we were in surplus. And again, that period for a month between April and May was also in surplus. And both times was quite a dramatic downturn in the markets. Obviously, if there's a surplus, that means that they're taxing more than they're actually spending in. And like I said, they have been spending quite a lot compared to previous years. So it's more that they were taxing a lot more out of the economy. Now that's stopped, that sort of weight that was holding the markets down has been lifted, and we can see that we come out of surplus back into deficit, and we are actually gradually rising again. So we just now need to see more data like we had with the US ISM manufacturing PMI, which came in an expansionary level, and we just need to see more of that type of data. Obviously, with China reopening, that's good for the global economy, and hopefully we can start to see it's all turn around. The sentiment is bearish. We've had CEOs like Jamie Dimon and Elon Musk now sort of publicly stating that they see bad times ahead and they need to adjust accordingly, and that we should all take warning from that. But at the moment, the data is not really showing any real signs of deterioration. We've just got high inflation, and a lot of that is due to high energy prices. At the moment, high energy prices around 120 or below, sort of towards 108. That is obviously keeping inflation rising. What we need to see is the price of Brent especially come back below the 100, break out of this consolidation. Obviously, if that would sort of maybe point to this being a false breakout, and then we come back down, test the 200 period moving average. OPEC yesterday said that they were going to try and fill the gap between what Europe was taking from Russia, and now obviously they're going to have an embargo on Russian energy. So OPEC, Saudi Arabia especially, has said that they'll hope to increase production. So that could help, and then we could fingers crossed, get this Brent and WTI lower, which will then allow inflation to come down, and then everyone can be all happy again. All right, a quick scan through the markets. Our Aussie yen trade is now completed. I've started a new account. You can see we actually got up to our target, up to the swing high up here. 95 is a great place to look for people to take profits. Australian dollar versus US dollar made it up to the 200 period moving average, closed above it, is now currently trying to get back below. Maybe they just swept the highs from the 4th of May. This was the FOMC. Obviously, we had a big sell-off the following day in the Australian dollar once the US dollar had gone higher. And we've seen that retrace now. They're taking the liquidity, and we're just waiting to see now whether or not the high from the 1st of June acts as support, or whether we come back down towards the highs of 26th of May, or even all the way back down to this sort of low here around the 12th of May. Euro versus the pound gradually grinding higher. The euro versus the pound greatly affected by what happens with the pound versus US dollar and the euro versus US dollar. If we go to the euro versus US dollar first, we can see that we are looking for a short. We had a signal to go short, so we went short. We have taken a bit of heat over the last day. That looks to be reversing slightly as the US dollar receives some bids. It would be good to sort of get back below the 1st of June low and then sort of carry on down towards this swing low here, as we just sort of said with the Australian dollar versus US dollar. Pound versus US dollar, we'll just scoot down to that. Again, we were in a downtrend that broke to the upside. We were in an uptrend that broke down. We're now looking for this inside day here from yesterday. The mother candle's the 1st of June. The inside candle here is yesterday. We just need to see that break to the downside, and then a continuation of this trend lower. On the dollar index, we had a close above the 9-period moving average on the 1st of June. We had the setup here on the 24th of May that we should be, beginning to look for longs. The 9-period moving average is above the 200. Price action is obviously above the 200-period moving average. So, this could be a continuation to the upside. We had a big retracement yesterday back into this sort of demand zone here, looking to see if 101 spot 5 to 101 spot 7 can hold. If we get a good NFP today, that will probably go against a lot of market expectations. So we could get a surprise to the upside in the dollar. And then we're looking to see if we can actually get back above this little balance area here, and then see if we can come up to the 104 spot 5 towards the 105, and if not, higher. The dollar CAD's come down into this demand area. We had the 20th of April, big down day on that sort of candle there. Then we had all of that selling pressure was bought into. So the buyers came in, created this demand zone. We're now back below the 1.26. So they've swept the big figure, looking to see if they can come down to 1.25. If we do get a reversal, get back above the moving averages, then that would be good. That might signal that the Brent and WTI is going to come lower, and the dollar index is going higher. If we were, to actually put on a Fibonacci trend extension, we could take it from this low up to this high, down to here, and then we could be also looking towards the 1.32, maybe up to the 1.33 for a measured move. Now, if the dollar does appreciate, then gold and precious metals have probably had their fun in the sun now, and they're going to come lower. Looking to the left, we've got this swing high here from the 5th of May. If we look to the right, the low of that candle has been tested a couple of times. They took the double top liquidity today. If they come back below and get through the 1850 down towards the 1827, and I think we do actually come a lot lower and start to hunt the liquidity below at the end of 2021. But my eyes are going to be on the benchmark index, S&P500. Looking to see the reaction here. If we do find support at the 1st of June's highs, and we don't take out the sort of lows from the 1st of June or 2nd of June yesterday, then that to me is very bullish. And then I just need to sort of start seeing price action get above 200 period moving average, and we'll see if we can actually start to make some sort of bullish trend to the upside, and then start buying the dips. That's what I'm looking at today. Fingers crossed we get a good NFP. Think, it'd be good to get a stronger dollar and see if we can actually ride some of these trends for a little bit longer. All right, good luck today, and I'll speak to you again on Monday.